Okay, good day to my students who are listening right now and watching this video. Again, welcome to our introduction to accounting. This is Miss Hazel Grace Aguilar and your OLC. So it is so nice to see you again today. So our topic is all about introduction to accounting. And here's our learning objectives. So the first one is define accounting. Second, describe the nature of accounting. And the third, explain the functions of accounting in business. So at the end of the class, these are the learning objectives that you should be able to accomplish. So let us define first what is accounting. Accounting is a process of identifying, recording, and communicating economic information that is useful in making economic decisions. So let us study each important keyword in this definition. So the first one is identifying. So when we say identifying, the accountant analyzes each business transaction and identifies whether the transaction is an accountable event or non-accountable event. So the first thing that an accountant should do is to identify if that is to be recorded or not. And when we say accountable events, these are those that affect the assets, liabilities, equity, income, and expenses of our business. So in every transaction that is happening in the business, okay, so the accountant needs to identify if it is an accountable or non-accountable. And when we say accountable, those transaction that affects the asset. So for example, they sell a product or they perform a service or they invested in the company. So those are the accountable event. Okay, and after identifying, let us now proceed with recording. And when we say recording, the accountant recognizes the accountable events. So after identifying which is accountable or non-accountable, he is now going to record it. And that process is called as journalizing. And after journalizing, the accountant then classifies the effect of the event on the accounts. And this process is called as posting. And after identifying the accountable and non-accountable events, and after recording it or journalizing it, let us now proceed with communicating. And when we say communicating, at the end of each accounting period, the accountant summarizes the information processed in the accounting system in order to produce meaningful reports. And it means creating a financial report, and that financial report would be submitted to the concerned people who has a connection within the company or even outside the company. And when we say economic information, it is generally displayed in the form of financial statements that show the economic resources that a business currently has. So everything that can be found in the financial statements are economic information, or in Tagalog, mga kaperahan. Okay? Again, accounting is a process of identifying, recording, and communicating economic information that is useful in making economic decisions. So when we say economic decisions, is it to go on, to pursue the business, to close the business, to invest to another business, to expand the business, to hire more people, to raise the salaries or wages of the people? Okay, so that's the example of economic decisions. So what are the nature of accounting? First, quantitative information. information expressed in numbers. So quantities or units. So when we say quantity, it could be 1, 2, 3, 4, 5, and so on and so forth. And units, the measurement of that. Or it could be the monetary unit. Is it peso or dollars or yen? When we say qualitative information, information expressed in words or descriptive form. So the qualitative information is found in the notes to financial statement as well as on the face of the other components of financial statement. So it is about the quality of the information needed. Okay, and usually it is written in the notes. And next is the financial information, information expressed in money. Financial information is also quantitative information because monetary amounts are normally expressed in numbers. And accounting as an accounting as an information system. A system is one that consists of an input, a process, and an output. So in accounting system, the inputs are the accountable events. The process are recording, classifying, and summarizing. And the output is the accounting report that is communicated to the users. Again, so it is just like compare into a computer system, di ba? Wherein you're going to input and then process and then output. So the input is the recording. The inputs are the accountable events or the transactions, which is has an effect with the assets, liabilities, equity, and other accounts. And then the process, recording, classifying, and summarizing. And after doing that, and the next is the output, which is wherein the accounting report that is being communicated to the users. And bookkeeping and accounting. So although bookkeeping function is part of accounting, but still bookkeeping and accounting are not the same. So when we say bookkeeping, it refers to the process of recording the accounts of transactions of an entity. And bookkeeping normally ends with the preparation of the trial balance. Unlike accounting, bookkeeping does not require the interpretation of the significance of the information system. So bookkeeping is just concerned with the process of recording the accounts of the transaction of an entity. So hanggang trial balance and then after that, the purpose of bookkeeping stop. Unlike the accounting, it covers the whole process of identifying, recording, and communicating information to interested users. And next meeting, we are going to discuss what does interested users or who are the users of accounting. And let's now proceed with the brief history of accounting. And accounting can be traced as far back as the prehistoric times since the dawn of civilization. When mankind began to engage in trade, perhaps more than 10,000 years ago, methods of record keeping and accounting have been invented. And as early as 8,500 BC, accounting has already existed. Archaeologists have found clay tokens as old as 8,000 BC in Mesopotamia, which usually cones, discs, spears, and pellets. And these tokens correspond to commodities like sheep, clothing, or bread. And they were used in the Middle West in keeping records. After some time, the tokens were replaced by wet clay tablets. So it was upgraded. And during such time, experts concluded this to be start of the art of writing. And in the Middle Ages, which is the 13th and 50th century, Trade flourished in places such as Florence, Venice, and Genoa. And this has brought advance, advancement in account keeping methods. In 1211 AD, one of the systems in accounting was kept by a Florence banker. However, the system was primitive as the concept of equality for entries was absent. That's why, and double entry records first came out during 1340 AD in Genoa. And in 1494, the first systematic record keeping dealing with the double entry recording system was formulated by Father Luca Pacioli, a Franciscan monk, and mathematician. So the double entries recording system was included in Pacioli's book titled Summa di Arithmetica Geometria Proportioni and Proportionista, published on November 10, 1494 in Venice. So the concept of double entry recording is being used to this day. Thus, Father Luca Pacioli is considered as the father of modern accounting. And that's the basic history of accounting. And Father Luca Pacioli played a major role in this history. So again, let us go back with the definition of accounting. Accounting is the process of identifying, recording, and communicating the um, final product or the financial information that is useful in making economic decisions. So what are the essential elements of the definition of accounting? Identifying, so we need to identify the accountable or non-accountable events. And then recording, or the process of journalizing. Third is communicating, or it could also be making of the financial accounting and then submitted to the interested users. When we say users, we're going to discuss that for the next lesson. And what are the three types of information provided by accounting? Quantitative, qualitative, and financial information. Okay, and I think that's all for today. So thank you again for joining with me today. So hope to see you again on our next lesson. Goodbye and thank you, everyone.